Welcome to the Tradier Rundown. I am Jim Murio. That's Bob Iacino. We together are the hosts of Tradier's The Trader's Edge that appears live on the Tradier Hub at 3 o'clock Central Time on Wednesdays. Bobby just told me that he was tired before this came on, so I got to bring extra energy to see if I can get him going. Are you drinking your coffee too, by the way? The people, we owe it to the people. Today we're talking about silver. Silver's had a big, badass move lately. As you know, I kind of expected. I'm not looking for attaboys, but that's what I was looking for. Do you think it's just a normal silver catch-up, or is something in the narrative shifted that's starting to favor industrials slightly more than it was before?
So silver's a strange beast. I think we're alike in that most of my largest losing trades have been in silver. And I think you mentioned sort of the same thing. I'm always looking for that silver catch up. And then, like, you look historically, gold has made new all-time highs. Silver's nowhere near its new all-time highs. And I think we're in a new regime of the gold silver ratio. Traditionally, the gold silver ratio is somewhere in the 50 to 60 range. That, of course, is how many ounces of silver it takes to buy an ounce of gold. And it's just, I think it's settling more around 70 to 80. And the reason I think that is because gold does have, or silver does have, these two personalities. So if you're buying silver because you think there's going to be chaos, central banks are not stockpiling silver, they're stockpiling gold. So there's one missing component to the silver trade. So I think it's a catch up, but I'm not sure how much catching up is going to be done.
So let's see. Okay, so prior from, let's call it 1998 to 2016, if memory's right, the average gold to silver ratio was about 60. So so right now it's about a 79 or 80 at 34 versus 27. I mean, that would be, if my calculation's right, about $45 an ounce if it went to its average of 60. I didn't just do that on my head. I calculated it on a piece of paper right before
you can see the screen behind you there.
Right, exactly. Tell me what's silver. But anyway, so that would put silver down $45. So let's say you're wrong, because right now it's at 79.80. Yeah, let's say it heads even to 70. That gets us at current levels, probably around the, close to the 40 level. It's a pretty damn good trade. I personally think it's flashing a couple things. China stimulus, are they serious? The early results are, the U.S., we're lowering rates. Yes, we're lowering rates. Are we potentially pricing in a president who's more pro-growth? That's an actual question. Are we pricing that in, Bobby?
I think we are. I mean, look, I'm doing an entire thing on our Substack about outcomes, different outcomes with the different candidates. I'm just calling them candidate A and candidate A, candidate B. We all know who that is. I'm trying to be even tempered here. But when you look at it, I think the pro-growth policies of a potential President Trump far outweigh the industrial side of silver, like you're talking about. And there's another component to this by me. Again, I did mention that central banks are not buying gold. When the West, will say, which is the US, cut Russia out of the SWIFT system, that's a gash that turns into a scar but doesn't completely heal. And I think you're going to see other governments continue to think about ways to accumulate and or back, whether it's their existing currency or joining the BRICS or something else, with gold. And that's why I still prioritize gold to silver. But like you said, if there's even a mild catch-up, silver is a phenomenal trade. I still think the investment part is gold. But if we're pricing in a pro-growth president, to your point, silver can get that little extra boost from the industrial side. You mentioned Chinese stimulus, right? Just yesterday, we saw that China increased the quotas, import quotas of crude oil for their privately owned refineries. Now, it coincides with Russia reaching a 4-month high in oil exports. Maybe they're just allowing for areas of their economy to buy that oil from Russia and store it. But the fact that it's going to the refineries leads me to believe they either believe in their own stimulus or they even see a little bit of economic growth, which would be a positive to your point.
So is silver, this is the last question too, we got to wrap it up, but in the electrification process, in a Trump presidency, we could be moving away from the Green New Deal nonsense, but still plenty of states, plenty of other countries are still angling toward electrification. So is it a big hit to the silver or copper trade, for that matter, in a Trump presidency from that angle?
Maybe the copper trade. I doubt the silver trade. I really do. I don't think it'll affect the silver. I don't think it'll affect the gold trade, because I think both candidates are inflationary. And I think Trump may be mildly more inflationary, which we can go in another time.
We will. So please join us on our show, Tradiers, the Trader's Edge. We want to thank you guys for all the support you give us, the DMs, the retweets. We are humbled by your support. This is Jim Murio. That's Bob Iacino. Thanks for joining us.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.